people from around the world tune in to our experts at the Wealth Press Roundtable. I'm Laura Cadden. Welcome to Wealth Press Roundtable Live. I'm with the editorial team here at Wealth Press. Manning the chat is Chris Warder, our editorial director. Hey, Chris. Do you want to say hi, Chris? Nope. He's
Hey,
there
everybody.
somewhere.
No, I'm here.
Good.
There he is. Just so you know, there's somebody on the other end of the line. Then today we also have market experts, of course, Celeste Lindman, Roger Scott, and Jack Carter. Nice to have you back, Jack.
Thank you.
Good to see you guys. So we'll get started today because a lot of things happened this week. We had PPI numbers come out, retail sales. But let's start off with, I was reading, of course, Diamond talked about JP Morgan Chase. When he did his presentation for JP Morgan Chase last week, he said we should anticipate a mild recession in the coming months. Now, Citigroup is saying that a stock market rally looks unsustainable as S&P 500 enters a new lower valuation regime. So I wanted to hear you guys' take on that. Roger, do you want to start us off?
Yes, why not? Sorry, I was a few minutes late. My link wasn't acting up. But anyways, we're here. It's all good. Good to see you as well. So I think it's a moving target. They've been increasing and decreasing, but the bottom line is everything is moving in the same direction. And matter of fact, I got even more as I was getting on here. I was getting a new report just now from Goldman that they're also downgrading several estimates. Things are just not looking as great as a lot of people hoped they would. And I think what's happening is every time there's a glimmer of hope, people get too excited and the bulls run up, and then the bears show them who the boss is right now. And I think that's kind of the environment that we're in right now, the kind of environment we may be in for quite some time.
Celeste, would you agree?
Yeah, well, I have a couple of thoughts on that and a couple of things I'm going to share from Bank of America too. But I think sometimes I think hope can sometimes be a four-letter word, a bad word, because we rely on that and we hope for things. But I would tend to think that we will have more of a mild recession, kind of like JP Morgan is saying. And I think eventually we're going to come out, history will say that we've been in a recession, kind of like when we had that COVID crash. And Don Yokin has showed this, and Garrett Baldwin has showed this, the economic graphs where they got that little thin sliver of a line for COVID, that is a recession. I think history will show us that that's exactly where we are right now, whether we go on to it in 2023 or not. But I want to share, if I can, a few things, some direct words from Bank of America on their earnings call. Now, Bank of America is the second largest bank in the US. And they're a pretty good indicator of the economy, the consumer, commercial dealings, mortgage and investment management business. So the cracks in the economy should kind of show up in what they have to say. So here, directly from their bigwigs, here's what they've had to say. So here, and I'm quoting this, most of it. In the wealth management business, our advisors grew by 800 in the second half of the year. Our team added 28,000 net new households across the private bank in 2022. Our average Merrill household opened with a balance of 1.6 million. We have verified digital users grew to 56 million. 73% of our customer households are fully digital and active now. And I think that's a real result of this COVID thing. The good things and the bad things. There's a lot of bad things about COVID, but there's a few good things that just forced us with that COVID. To go on and keep quoting. So our baseline scenario contemplates a mild recession. So this is coming from Bank of America. It contemplates a rapid rise in unemployment that peaked at 5.5% earlier this year in 2023 and remained at 5% or above all the way through the end of 2024. And they say, this is their quote, obviously ours is much more conservative than the economic estimates that are out there. And now what I'm going to tell you next, as I quote them, at first it's going to sound really bad, but if you listen to this all the way to the end of this quote, it's just kind of interesting. So there continues to be a slowdown in the pace of consumer spending. Year over year growth percentages earlier in 2022 were 14% year over year. They've now moved to 5% year over year in the fourth quarter. So what does that mean? Well, with the level of growth in year over year spending, it's consistent with the low inflation, 2% growth economy that we saw pre-pandemic. So some of the things that we see are this kind of rubber band effect, I think, as well. And so here, I'm going to keep quoting them. Sorry, this is a little bit long, but I think it's really interesting to hear exactly what these big wigs that are highly regulated, what they have to say. Consumer deposit balances continue to show strong liquidity, continuing to hold several multiples of balances that they had as the pandemic began. These balances are drifting down, but they still have plenty of cushion left. Keep going. We've seen pent up demand and our teams gathering back together in person to drive collaboration, to spend more time with our clients. Inflationary pressures continued, but the benefits of a more digitalized consumer base helped us offset those pressures. So again, that forcing of being digital. We've got 318 billion more in deposits, 10% more check-in customers, 28% more investment accounts. We've increased the amount of new card accounts by 4%, and our payment volumes are 36% higher. And with that, we're servicing these customers with 387 fewer financial centers because of our digital capabilities. And that's allowed us to need 10% fewer people to run the business. Yeah, that's a downside. But on trends in consumer balances in low yielding accounts, the cohort that was 2,000 to 5,000 in the average balances pre-pandemic had 3,400 in savings. And so they're still sitting at 12,800, but they peaked early in 2022 at 13,400. So they're down just a little bit. Okay, that's my ad. They're down just a little bit, but they go on to quote. So they're drifting down, but it's still multiples. And the big question will end up being is, will spending end up being down? That's their quote. And here's what they say. Well, if they're employed, probably not. And so there's a lot of, well, what's going on with employment? And that's, something to talk about at different times as well. But on buybacks, they quote, we bought back a chunk of shares this quarter. Now we're close to 11.4% target. So we're back in the game. And so future trends and charge-offs. So we're not going to look too far into the future. But if you all want to look at our 90 days past due in the credit card data that we show you every quarter, that tends to give you a pretty good leading indicator, and I'm still quoting, of what's coming down next quarter. So you can see that the 90 days past due have picked up just a little bit, but still well below where we were pre-pandemic. But it looks like it's drifting just a little higher. So I can go on. There's just a lot there. They are just a little bit more. One thing that's kind of consistent here, they're quoting with the pandemic, the customers are paying down the card balances. That's consistent. They're still doing that. We have not charged credit underwriting standards. We haven't changed those, credit card underwriting standards. It's just the demand side is a little softer because people are reading the same headlines. And I love this quote. They're saying it's a little softer because people are reading the same headlines that all of us here are, and we are reading about a recession is coming and that they should be careful. So, and also Bank of America, and all these earnings that have been coming out, I know we're going to talk about that too, just a variety of reactions on their earnings dates.
Very interesting. What do you think of that, Jack? Was there anything in there that surprised you?
Nothing. I wouldn't believe anything Jamie Dimon says.
Oh, but well, what about Bank of America?
That's
What do you
Bank
think
of
about
America.
I wouldn't believe what any of them say. There's just two different stories going on in banks. You got Goldman Sachs took the largest loss they've had in 12 years.
Yeah.
And most of that was due to the inability to execute just simple banking stuff. They tried to roll out that Marcus bank for retail people. That thing, they lost billions doing that. And their merger and acquisition and underwriting business just tanked. There's no IPOs. There's nothing going on in that corporate finance world. So, they're seeing a recession. Some of the banks are Morgan Stanley, they're killing it in the wealth management division, and they're not doing much of that fee-based business. But, their stock shot up hard yesterday, and Goldman took a big hit. So these guys, they're just talking heads. I just see it all around. I can almost smell it right now, a recession. You got just tens of thousands. I've never seen more tech layoffs in my life. And, they
including today.
The pandemic. Now it's just kind of like a readjustment, kind of getting back to where they are. But these companies are going to make less money, and we're going to go into a recession. I could almost taste it.
Well, let's move on to
me-
earnings
let-
results because that's
let me
gloomy. But go ahead, Roger.
let me just come full circle on this, and this just kind of really, if this doesn't prove what Jack is saying is 1,000% correct, I just don't know what will, and I'll show you why. So a few minutes ago, Celeste gave us an update on Bank of America's. What was the headline? Who wrote that report, Celeste?
That was from their earnings phone call.
Okay. So now I'm going to give you guys Bank of America's report this morning that they do every month from their fund manager survey. They do every single month. So Celeste is giving us an opinion of what Bank of America's fund managers said and what they think. Now I'm going to give you Bank of America's report of what their survey showed. So what their talking heads are saying and what their survey is showing.
Amen,
Same
brother.
source, right? Same source.
Mhm.
And this report came out about an hour ago. Fund managers most underweight U.S. stocks since 2005. Money managers have not been this is according to Bank of America, have not been this pessimistic on U.S. stocks in more than 17 years. But global recession fears have peaked, according to the latest survey. According to their survey of fund managers, this is fund managers that have over 772 billion under management. They having the lowest exposure to U.S. stocks since October of 2005. While the humans are still bearish, they're a lot less bearish than they were last quarter. With optimism on China and the Fed pushing cash levels down to 5.3% from 5.9%, the biggest drop since June of 2020. January saw big rotations. Basically, what they're saying is that recession peaked in November of 2022 at 77%, but we're still at 68%. So we're still not out of the danger zone yet. But what they're saying is January saw the biggest rotations into emerging markets and the biggest rotations out of U.S. Technology and communication services. And this is according to Bank of America. So it's just, it's crazy, right? What this is from the same bank. This is from the same bank.
Mhm.
Yeah, I take what you just read, Roger, which was phenomenal. And thanks for sharing that too, that a lot of it is congruent. And, we've seen in the markets, we've seen that China's been going up, but if you listen to like headlines, you feel like, well, China should be tanking. You see that in European markets too. And a lot of these things, that kind of recession peaking. And when you see that huge transition and you're talking about those tech jobs that are just falling, just falling like flies, it's awful. I feel really bad for those, but I'm hoping some of them have the skills that some of these other industries really need, because we're having a really difficult time in my own area finding qualified people to fill the jobs. So it's so important. And I think what we're even saying here is it's so important to have these sessions, come to these roundtables, and whenever you can get this kind of information, because you need a little bit more insight than some of those headlines that are out there.
Definitely.
Excellent point. Well, let's move on to earnings, because it is, like I said, a lot to talk about this week. We have a lot of upcoming earnings. I was wondering which particular earning results you guys are anticipating could move the markets in the coming days. Celeste, do you want to start us all?
Sure, I'll start, and I'll be a little shorter this time because there's a lot of earnings that have come out. And a lot of earnings that are on their way out, or way to come out. And so we're really looking at one. If I had to pick one that I'm most interested in, it's probably going to be Procter & Gamble, because I think it's kind of like what I was saying, Bank of America, really talking about what the consumer is doing. So I think Procter & Gamble, because I want to know, are people buying Mr. Clean and Swifters to clean their house, or are they using old towels and water? I think that's going to tell us a lot.
Interesting. How about you? What do you think, Jack?
Yeah, I'm right on. Earlier this week, I mentioned Procter & Gamble as a surprise earnings. Maybe not surprise good or bad, but it's going to be a real accurate indicator of where the consumer is. Are they still going to brush their teeth, and what are they going to do? So,
Yep,
like Les
exactly.
said. But the other thing I think is going to be interesting is where Microsoft reports, and I'm really interested in that one, and IBM. But none of these are going to really surprise to the upside where they shock people. It might be, a little bit better than the worst of the expectations, but there's not going to be anybody killing it this earnings season.
Interesting. Steve just posted in the chat. What about Netflix? I thought for sure you guys were going to name Netflix. What about you, Roger? Is Netflix on your list?
Absolutely. Netflix is big time on my list. Actually, yesterday, my VIP room, I went through the whole week and I pointed out what I'm looking for from each earnings. And basically, from the financial companies, I'm looking to see if people are, if they're collecting more money. And like for Charles Schwab's, I want to know if their banking is getting bigger. For DFS, I want to know if people are paying off their debts, which kind of something we talked about today a little bit. For American Airlines, I specifically want to know how what their plan is for commercial passengers and business class, because a lot of them are undoing the business class, and that's where airlines make most of their money from. So from M&T, I want to know if they do a lot of merchant processing. I want to see if their merchant processing is going up. And as you guys correctly said with Procter & Gamble, I want to see exactly what you both want to see. I want to see if people are buying things up. So I think not every company, but like interactive brokers, I want to see if U.S. investors are coming more into opening up U.S. stock accounts, or are they opening up commodity accounts, because interactive brokers has both. So I think every industry has a kernel that's most important, especially right now. But overall, I agree with what Jack said. I'm not expecting any miracles out there. Now, Netflix, let me be specific about Netflix. I have very strong opinions about Netflix for two reasons. I personally love the company on a non-financial basis because I utilize it all the time. So I'm biased towards it. So for me to say something really negative about Netflix, it's got to be really bad, because I really love the company. And just this morning, I was going to work, I was parking in my car, and I'm looking on my phone. My wife was texting me something, and I'm seeing a headline, and I'm seeing another streaming service is coming out. One I didn't even know about. Did you guys know MGM Plus? There's a new service called MGM Plus that's about to come out, or it's already out, where you could see all the James Bond movies and all the Mission Impossible and all the MGM movies. So there's
Just
another.
yesterday. I just heard about it yesterday.
Okay, see, I had no idea. I just found out today just by looking at my phone. So another competitor. I think Netflix is going. I think Netflix is going exactly through what Blockbuster went through 20 years ago. I hate to say it, but I think they're going through the same thing, and I think they're trying to put lipstick on a pig at this point. I don't believe last quarter they got off scot-free with, well, people, we're going to get away with the sharing, and tighten up our security.
Right.
I think that's a bunch of nonsense. I mean, I think that's so old. I think that's like something they would have been talking about 10 years ago, but people fell for it. I'm just seeing the writing all over the wall, and I hate to say it, but I really do. I think they're going to get bought out. I think Disney or Apple or they're going to buy out. I think they're going to merge with someone that has a very natural, organic way of getting premium content, because I don't see them sustaining themselves in the direction they're going right now. And this dubbing foreign films, I think it's just a bridge. So I have a very strong vested interest, and I hope I'm wrong on this one, but I'm just not seeing it for Netflix.
Yeah, Netflix hasn't done that yet, by the way. Not that I know anyone who has a shared account with a friend.
I don't know anyone either. I was like, well, maybe 10 years ago. I don't know. I don't know.
No, I'm totally being. I actually share with a friend who lives in Arizona, so I'm like, they're totally gonna figure it out, but they haven't yet.
My daughter has,
Don't tell anybody.
all my kids live in different parts of Florida, and we all share one account. We have and never seen a problem with that. Anyway, I think it's a bunch of BS, but that's my 5 cents.
Well, let's move on to PPI. So it declined 0.5% month to month, which is better than expected. How and when do you think that'll impact stocks and the overall market? Jack, what do you think? Will it have an impact?
Yeah, I got to just tell you, I don't believe that any government on the planet could figure out a PPI number or a CPI number. I just think it's impossible. So whatever they put out, I don't look at that. I look at the reaction to that. When the CPI comes out and it rocks the market, I'm just looking for the reaction and to play the reaction. I don't really believe any of that stuff's accurate. I mean, just think about it. How could they really? I mean, how could people actually come up with a PPI number? I don't believe that. I look at the reaction and I take it that way. But
So you don't think that's why the markets are down today, huh?
no, I don't think so. I don't think so. I just think there's just such buyer's fatigue. You know, everybody's, like Roger said it earlier, everybody wants to get excited. We're going to have a bull market in 2023. That's not happening. Every time it goes up, it gives someone else an exit opportunity. You know, there's no follow through with any of these rallies. So yeah, I don't think PPI is going to do much, and it's going to be all about the Fed and what he's going to do, and then trying to price in what kind of recession we're going to have. But PPI, they might as well call it DPI or TTI or whatever they want to call it. I don't buy it.
Think it's a bunch of bunk, huh?
I just think about it. Just really seriously think about it. How could the government come up with that number? They got to make it up.
There's a lag. There's a huge one of the, well, even if you take what Jack is saying as possibly, you got to consider the lag. There's such a big lag there that it gets revised, and then the number, it's so even if it's right in terms of the direction it's moving, it's very, very hard to pinpoint it. The reaction is definitely what you want to go with, not the actual number. 100%.
Mm-hmm. Celeste, do you have anything?
Go
ahead.
I would 100% agree that it's the reaction. You know, we should spend more time kind of looking at the price action than we should be studying the reports, because I think that really says a lot. I think it really comes down to, I mean, the markets are doing what they perceive the customers and the consumers and the producers are thinking. And so I think overall, you know, market likes that, you know, prices are coming down because the consumer and the producers like that the prices are coming down. But I think the key to keep an eye on is, you know, what is inflation doing? You know, we've sensed this pullback, but are we going to have a reoccurrence of inflation? And that's what I'm wondering about. And you know, even the price of energy through 2023.
Mm-hmm. Jack, did you have something you wanted to add?
Me? Yeah, I got something I want to add.
Wait.
There's no reason for anybody to be worried. I mean, we're talking about recessions and the market coming down and all that, but here's the thing: there's always a great opportunity. And if I could share my screen, I want to show you what I'm talking about. So can everybody see my screen here?
Yes, sir.
Yes.
All right. So we got an urgent briefing coming up. There's just a great opportunity that I want to invite everybody on here today to come on at 1 o'clock. And I'm glad to see everybody on this roundtable, because you are the type of people that want to get educated. And those are the type of people that are going to have success in 2023, right? So I'm going to have a workshop today on a money-making strategy I've been using for a long, long time. And I want to thank you for having me on today. And I appreciate the opportunity to get to talk to smart people about the markets. And now I think it's more important than ever to take in quality information and understand what's really going on in the market. So I recommend all of the viewers, I commend all the viewers for being on here. That's showing that you're really investing in yourself. And these markets are completely unpredictable. And with options actually overtaking the volume of stocks, that happened, and a lot of people didn't know that. And potentially now we have options influencing the price of the stock instead of the price of the stock influencing the price of the option. We've just got a condition that we've never experienced in the history of the market. Very strange. And I think things are going to get a lot harder for retail traders. But one of my favorite strategies, leveraging my favorite stock, is perfect for these market conditions. Absolutely perfect. So I'm not going to give away too much here, because at 1 o'clock, I'm going to do a deep dive in the whole thing. But what I can tell you is that these unpredictable markets, combined with these high prices and options we're seeing now, it supercharges this unique investing blueprint. So what we have is more people buying calls than ever before. Just the options volume has just soared. I got a really cool chart I'm going to share with you about that too here in a little while. And the cool thing is, it wasn't until recently that this entire strategy was even possible for the average investor. But thanks to a landmark event, now just about anybody can do this. And when you see how it works, I'm just about going to guarantee you'll want to join me taking advantage of this anomaly every month. So I'm doing one trade on one stock once a month, and we've just been killing it. So Celeste and I are going to host this urgent briefing today at 1:00 p.m. So mark your calendars. My team's already opened up the Zoom room so you can log in and grab your seat. And we're going to be in there shortly. That's at 1:00 live. Bring a pen and a paper because you're going to learn some really cool things. So to log into this, write this down. Hopefully you got a pen and paper now. Go to jackcartertrading.com/critical briefing. And if you do go here and you stay with me on this, there's no waiting with this strategy. You'll be able to apply what you learned from this workshop even today. So get on this if you want to see some money hit your account.
jackcartertrading.com and /critical briefing.
It's really cool because I was doing my morning video today, and I was doing the CTA for you guys, and I was looking at it, and it was talking about how options could be leading stocks, and it's very, very true. It's something I never really thought about, but the truth of the matter is, we look at implied volatility on the options to lead stocks. Why not look at other factors? So I think you're totally onto something, Jack and Celeste. I think this is going to be very, very cool, and I urge everybody to attend. Don't miss out. It's going to happen right after my VIP room. Matter of fact, Matt, maybe you can, Laura, maybe you can post that link, and Matt and I can send it we can take it into my VIP room and get you guys more people, because I think everybody needs to have their eyeballs on this. This is very, very important. It's very relevant, and it's critical that everybody attends. Nobody else is talking about this. And Jack, you've proven yourself to be an option master. So this is very, very timely, very important, especially right now with earnings, with the volatility we're expecting. You folks do not want to miss out on this. Don't snooze. This is brand new. I can't wait to hear it myself. So I'm going to finish up a few minutes early so I could jump in and take my notebook that I have right here, my little mini notebook, and my pen, and start taking notes, because this is dynamite. This is stuff you guys want to join and check, and keep your mind open. There's a lot of things you think you know, but you'll learn from a real pro. And Celeste and Jack, they've been gearing up to do this. You guys are going to learn a lot and hopefully use this to make some money. So definitely recommend this.
Absolutely. I think the timing is so perfect. You know, Roger, you talk so much about algos and how algos have changed so much in trading over the years. Well, what Jack has discovered, it's changing the markets too, where this option activity is actually overpowering what's going on with the stock itself. You used to always say, hey, the stock leads the options. We're at a pinnacle point in the market, and the timing is perfect. I'm so excited that all of you who are here are going to get the opportunity to listen to what Jack has uncovered. It's hugely, hugely valuable. I'm adding it to my trading arsenal myself. Can't wait.
Good. It's fun stuff. I love doing it every month. I love sharing it. So don't miss this. You'll do yourself a favor. And
don't miss it. And Jack, do you find that these type of events that you're going to be talking about in the webinar occur more during earnings season? Or is there more opportunities?
Yeah, there's a lot more opportunities. Anytime we get a real spike in volatility, this overall is going to do great. And we're seeing a lot of that volatility now. And just when you don't have any follow through, just like we got the market go down 300 points, next day it's up 130, next day it's down 400. That kind of market is perfect for what I'm going to be talking about.
Also, I noticed this morning, I do my videos every day, and I go through the same things. So I kind of am forced to follow it. But I noticed that VIX is right now making a multi period low. Does that impact the strategy at all? And again, I'm asking like I don't know anything about this, so I'm just trying to get as much information as possible on this.
Well, first thing I'll say, if I don't believe anything Jamie Dimon says, and I don't believe anybody can come up with a PPI, you got to believe that I don't believe in the VIX. I think it's broken.
Okay.
I think it's broken. So,
yeah.
You think after 2020, after the COVID, that whole it's just not reacting the way it's
never helped me. It's for me, less is more. The more indicators and crap I look at, I'll talk myself out of doing a trade. So I don't look at the VIX. I can tell. It's like you look outside. You can tell it's a nice day. You don't need to look at a thermometer. I can tell. I don't need a VIX. It doesn't help me, and I don't believe in it either. So there you go.
Good to know. Good to know. Well, folks, definitely check out this briefing. You're in for a treat. It's happening at 1 p.m. Eastern time, and I'll also update people in my VIP room in about an hour to make sure they don't miss out. But Celeste and Jack, they're gearing up for this. Don't miss out. You guys are going to absolutely love this.
Thank you.
I think I think it's important to note that the event today and the training and the discussion at 1 p.m. is free. So please
It's free.
go ahead and register.
You guys aren't charging for this? Oh my God. Oh, wait. We're going to get a lot of people in this room. I thought it was a paid for event. This is
Not this
free.
time.
$2,000 for the hour, but
Folks, jump in this opportunity. It's worth its weight in gold. Jump in right now. It's going to be great. And again, earnings just started. We only have 62 S&P stocks coming out. The main earnings season really is going to go over the next 3 weeks.
Yep.
So the timing just couldn't be perfect. And what Jack is going to talk about also works when it's not earnings season. It's not limited to earnings, but highly, highly, highly recommended. I thought it was so interesting, Celeste. It was so interesting today that you had a report from Bank of America and I had a report from Bank of America. And ultimately they did say sort of the same thing, that things are getting better. They're still not bad, but isn't it amazing how you can have two reports and they sound completely different and they're coming out from the same bank on the same day.
Yeah.
I just, and this is why Jack doesn't go for the shiny light, shiny object syndrome. He focuses on what he's going to talk about. And this critical briefing, which I would call a critical briefing, is what it is something you definitely want to participate, folks. So take advantage of it and take lots of notes. It's going to be a great time.
Excellent.
Okay,
Yeah, I can't
so-
wait. It's going to be fabulous.
1 p.m. today, Celeste
Okay.
and Jack for free. Thank you all for joining us today. Everybody out there, everybody in their houses, in their homes, in their studios. Appreciate having you all here. I want to make a quick announcement about next week. Next week, I'm going to be introducing everyone to a new host of Wealth Press Roundtable. It's going to be Don Yoakum, a former guest here,
Wow.
one of our experts. I've asked Don to take over kind of the reins of this, to give it more of a macro background that he can focus a bit stronger on it. I'll still be around probably on the operational side, maybe free up Chris Swarter here. So anyway, we're gonna do a big
news, folks, because Don is one of the brightest guys you're ever gonna.
He's great. He's
amazing.
fantastic. He's really good. We've had him on Ask the Pros many times, and he's fantastic. And I subscribe to his Telegram channel, actually. He always has some good words of wisdom there. It's going to be too bad we're not going to see you, Laura, but maybe you can,
Right.
come by and say hello sometimes.
I'll be
we're gonna
around.
miss you.
I'm still going to help him out on the operational side, but I just thought it was a nice move. I had to control beg. He's actually very excited about it. So I
Good.
think it's going to be a great addition to this show.
And we're
So-
very excited to have him. That's going to
Well,
be fantastic.
Fantastic. And Laura, thank you for all your service. You've done a fantastic job.
have.
And it really
Thank
have
you.
brought this audience a phenomenal amount of great material that they can act on even right at the very moment. So thank you for your commitment and your integrity in all of this. Fantastic job. We're going to miss you.
Thanks. I appreciate it. All right. You all take care. See you later. Thanks everybody for joining us today.
See you
Have a
Bye,
great
guys.
week.
Bye, Jack.
Bye,
Bye,
everyone.
Celeste. We'll see you
Bye-bye.
guys at 1 p.m. at the critical
Laura.
briefing. Don't miss out.
Don't
Be
miss
there.
it. Don't miss it. It's
The
fantastic.
free briefing, 1 p.m. Click on
Free.
that link.
Bye,
Bye.
guys.
See you soon.
Thank you.
All right, folks, I'll keep the room open here for a little bit so that you can click that link to join Jack today at 1 o'clock. I think Celeste will also be in the room, so you can catch up with them and check out this urgent briefing. Thanks for joining us, and we'll see you next week.